Hello and welcome back to Converge. It is early July. I'm glad to be back with my co-host Alanna Frost. I'm Alex Lawrence, head of content here at Convera. Tedd Huff, welcome to Converge. Good to have you. I know you and Alanna have bumped into each other a couple times along the industry circuit.
Yeah.
I'll let Alanna sort of take it away and grill you. But it's great to have you here. You're a media maven, much like we aspire to be, and great to have you on the show to share your expertise.
No, I appreciate it. I'm looking forward to this conversation. You guys have set up a really good way for us to talk about some very interesting and timely topics.
Yes,
Glad to hear it.
yes. Okay, so we can kind of jump into it. Let's start with a little bit of background, right? For the folks who don't know you, which I'm sure are very few, tell us about your background in fintech and payments and some of the work that you're doing, right? Today, some of the types of end customers, some of the types of engagements.
Yeah, well, I had to update my bio recently because I've broached the 25-year mark. I've now it's 25 years plus in fintech. I started back when credit cards were, I think there were like 5 or maybe 6 interchange categories for credit cards. ACH, you still had to fill out this form and take it to the bank to
Yep.
get an ACH done. A wire took almost an act of Congress to get through. So, everything was super clunky back when I got started. Not as far back as punch cards, but, we're going back a bit. But today, I take all that experience and I run a advisory firm called Volier, and our main focus is connecting financial institutions and fintech companies together. Not only that, but really helping them get ready to scale and deliver on their promise to their customers. Not only that, Alex hinted towards it. I am the founder, host, executive producer for Fintech Confidential, which is a network of podcasts and video shows where we really just break down what's happening in fintech. And, it's really nice to have these conversations. My background comes from being chief experience officer, chief strategy officer for a number of startups, but also I've worked at a handful of public companies. Well, one was public, now they're private, but I spent some time at Nuvei, Global Payments. I can probably put all my partners underneath of that because almost every company that I worked with in acquiring got acquired by Global Payments, which is
I
another
was
fun
gonna
story.
say, I'm like, they're kind of eating the earth at this point.
Yeah, yeah. So I could say Global Payments, and then you can go look at the list of people that they've acquired over the last 15 years and get a pretty good idea of that. But one of the really cool things in my experiences over time is it wasn't just issuing, it wasn't just acquiring. It's been cross border, it's been global expansion, it has been treasury management. It's been this whole thing around how do we enable people and companies to move money where they need the money to go? How do they pay for the products and services that they do? And through all this time, I've had to learn how to strip everything apart. Working with everything from a local credit union to Apple. I've had the benefit of working with Amazon, Walmart, a bunch of very, very large company. Restoration Hardware is another one, and really helping a lot of people now shift from the legacy systems that we're all familiar with into real-time payments and digital assets. So I know I probably went a little bit too deep, but
No, it's
we've got a lot of fun stuff going on over here.
that is really fun. So would you say there is like a focus through, kind of the most recent years? Like it sounded like, yes, payments, but more global retailers. Are they virtual merchants? Are they marketplaces? What are they? If you
So
had to
so
choose.
our advisory group, we break our advisory group out into a handful of different areas. One is we have digital assets. Two, we have issuing and issuing processing. Three, we have acquiring. And then four, we have the optimization of a lot of these companies. And all of this is global. So not a single one is just North America. We span everywhere from Asia, LATAM, the EMEA, and really go across the board with all of these.
Awesome. That is so nice. I thought you were gonna pull a Miss America, the EMEA,
No, it's so I think
the
one of the key reasons behind
Australia.
that. Yeah. Well, the thing is that the world is becoming smaller and smaller,
Truth.
and the need to go beyond a border has never been greater. And we're starting to see that in a lot of the technologies, as well in a lot of the regulations that are going on, not just in the US, but elsewhere in the world.
No doubt.
So since you guys met on the conference circuit, I know one conference you recently went to, I think was, and this is one I've never been to. I don't know about you, Alanna, but the Smarter, Faster Payments show, which I love the name. Why not call it Smarter, Faster Payments? That's what it's all about. So what did you take away from that conference this year, Ted? What was your, if we're just going to talk a little bit about the latest themes that are making the rounds at these sorts of industry events?
Well, at that show, traditionally, I mean, it's hosted and managed by NACHA, the North American Clearinghouse Association. And so typically their focus have been focused in years past really on the types of things that that organization oversees. This year was really different. They went beyond that. So not only were they talking about those things, there were lots of discussions around artificial intelligence, especially around fraud detection, because just like payments are getting smarter and faster, so are the fraudsters. So that was a big discussion going on there. Real time payments has been a huge topic. There were probably half a dozen or so sessions really focused on that piece of it. And it wasn't really just on receiving. Now it's gotten to the point of sending and how we send that, and making it just as easy as making and sending a phone call is kind of the way that they really looked at it. But also the discussion is looking at the, and I always screw this up, but the ISO 20022. Yeah, I got it right the first time.
Yay, good job.
Uh, that one had some relevance because of the deadlines that we have coming up. And it's been really fun to see the financial institutions talk about how they're approaching it, the service providers, how they're looking at it, as well as the users of these products and services. I can't tell you how diverse of a perspective, because everyone has a different perspective on it,
True.
and they don't all line up right now. So that may be something we talk about. They just don't line up when it comes to that.
Yeah. I mean, a lot of people talk about, enriched payment data, and I'm like, what are you enriching it with? You know? Oh,
Well,
that's
there's so much data that can be provided in that standard. Uh, One of the things that continually came up, and we can dive into this a little bit later too, but the thing that continually came up is like, great, you can put more data in there. That's from the standard perspective. Then you've got the user saying, okay, well, what data do I put in there?
right.
And then you have the provider saying, okay, what data do you want to put in there? And then you have the financial institution
And
saying,
then
okay, what data is
who's
important to
accepting the
us?
data and where is it getting pushed up to?
Exactly. And that, I think that's the really interesting thing about it is that we found out through the API-ification of just about everything that more data doesn't mean better data. More data doesn't mean better decisions. More data doesn't mean better anything. Sometimes it can just mean more data. And I think right now that's where they're at with the ISO 20022 standard is like, how are we going to use this data so it's not bad data in, bad data out?
Right. Yeah. Yeah. Well, so you said at the show, right? It was kind of all over the place, but there was, kind of
Well, I wouldn't say
covering up.
all over the place. I think it had a lot of things going on that were
Yeah.
broad across anything that had to do with payments.
Okay. Okay. So let's choose one topic like AI powered fraud detection and start with
So,
that,
so
right?
how many minutes did we get into today's conversation before deciding to bring up everybody's favorite topic of AI?
It's got to
It's
be in the
true.
first 10, and we just made it.
I
Barely.
know, I know. I mean, truly, truly, and I mean, there's so many depending on, kind of the SaaS company, the paytech, the fintech or whatever, the narrative is always a little unique. But, we've had Sardine on the show and
Uh-huh.
spoken to them at length. They're an ex-partner of mine kind of at a previous company too. Um, and, they cover off a bunch of different type of fraud use cases, transactional fraud and all of that. But what are, I guess, you seen specifically as far as advancement and implementation, use cases today for B2B, right? And embedded payments. I mean, do you see like a trend occurring or do you see people starting, I'll stop talking. Now you talk.
Well, I gotta say, Sardine, I always love my conversations with Simon over
Yep.
there. So
Yeah.
so we always like to have these conversations, and sometimes we agree, sometimes we don't, but I guess that makes a great conversation, right?
Right.
Uh, but when we look at the AI fraud detection, to be specific, I mean, it's gaining some massive, serious traction, especially in B2B payments. Um, you know, Companies like Juniper, they've been embedding AI engines directly into the platforms. And then one of the things that we're starting to see with some of our clients that have embedded these types of things into their systems is their reductions in false positives when it's set up right and the models are built right can be as high as 90%. And so like that's been a big piece. And what has started to happen is they've started to identify VIP customers,
Mm,
and they've been able to identify that although it may look out of sorts for that customer, it really hasn't been. And we were talking about retailers and stuff that we work with. They look at the invoices, and they're leveraging the AI to identify whether the invoice is real, whether the
mm,
invoice matches the contract, whether or not the invoice is within the guidelines of the allotted hours, whatever it might be. So we're
yeah,
starting to
the
see
account
that
number
start
was
to.
recently changed. I noticed, like, that was actually a really cool feature somebody was talking about, fairly recently. It's like, the bots get into the software, and then it'll be everything is accurate except for, like, the account number has been adulterated or something on the invoice, right? Um,
Yeah.
and it was pretty cool. They were starting to flag, like, kind of red, yellow, green, like, almost like, "Stop, proceed with caution, or just go," right? Like, "The invoice is clean," or "Humans should look at this," or, like, red flag, don't send money."
So one of the conversations, and I'm going to go back to Money 2020, that's where one of my first conversations really around agentic payments really started to kick off. And our conversation there was, all right, that's really cool that I've got these agents running this, but we still have all these legacy systems that everybody's using. We still have the limitations of the speed and the effort and the timing and all that fun stuff. But now, really, we need AI to detect when other AI is behaving badly. So yeah, and I don't know if you guys have seen the video where they put the Chat GPT voice AI up against, I think it was the Gemini voice AI, and they started asking each other questions, and then they both
Oh
realized
my
they were AI bots, and they're like,
yes.
"Hey, let's go to shorthand."
Exactly,
Yeah,
I did see that.
and
I
and
did see
so it's not, this isn't like science fiction. I mean, we
Yep.
are gonna have AIs talking to AIs, and now we have to have AIs talking to AIs, watching that conversation between the AIs. I'm gonna see if I can say AI one more time, right? Between all of these different engines to make sure they're not behaving badly. Because you have to remember, all of these models are based off of human interaction, human intervention, all these different things. So it tends to take on some of our bad habits too. And that's where the behavioral analysis really starts to kick.
Yeah, yeah. So, kind of, if the bots are taking over the invoices and the software, and then we're using other bots and agents to come in and identify what the other bots are doing, you know, And that's kind of on the outgoing side, right? Call it like AP flows, finance flows. It's like what there's been recent developments, kind of on the incoming side where there's, other companies now kind of launching these solutions, request for payment, the RFP capabilities. They're becoming a little bit more, I guess, I mean, I'm just seeing them more frequently, right? Whether it's a bank or, it's Plaid, um, you know, for standard B2B cash flow management, where do you see this, working? Do you think it's fully productized? Let's talk about kind of the incoming side.
This is a conversation I literally had yesterday with a technology partner of mine. I think we've started to make the mistake of saying how I want to use AI and starting the conversation with I want to use AI versus saying I have this problem that I haven't been able to get efficient with human beings or with some rule sets that I have, and how can I leverage AI to streamline, to systematize, to reduce failures in those areas. And I think when you start to get to the incoming side of the house, the place that's going to be, and I'll use a recent thing that has happened, right? But I think the incoming is going to be in flight
Mm,
validation of the sender and in flight validation of the receiver. And what I mean by that is just recently, the DOJ filed a lawsuit for a company that used stablecoins to pay their vendor for desktop support,
mm,
and they sent the stable straight over. Well, lo and behold, if you dig a little bit deeper after the fact, right,
yeah.
we find out that that's a North Korean nation state on the list, the sanctions list. Well, those are the types of things that I think we're going to have to look at. And then I look at prohibited business types or prohibited uh, products or services. You start to look at that, or even highly regulated items. Like I have a friend that works at a company that they do DNA. They create with stem cells, and they create all these different variations for folks, and it's only allowed to be purchased by certain companies. There's a lot of validation that's going to that. So I guess what I'm saying, Alana, is that in not doing the point in time of I validated it, but really doing that in a real time, consistent, ongoing manner, I think is really where the AI is going to start to kick in, and really understand the nuances behind it.
Well, and that makes sense too, because there's like kind of different changes and different I think it's the EU regs that have happened fairly recently around pay
Uh-huh.
verification and different things going on too. So that probably makes sense, right? It's like historically it was people didn't really know they wanted real-time payments. Um, and they didn't really care to like use them as an outgoing way, but they wanted them incoming, right? It's like, well, I want it instant though. Um, but at the end of the day, right, it's kind of like who's requesting the payment, doing that real-time verification. And I think you're right. I think it has a lot to do with like everybody just wants to use AI.
We can jump right over because what you guys were talking about before plays into my stuff that I wanted to touch on around just how um, the state of the union among the stablecoin world and those who are adopting stablecoin rails and the fast growth we've seen over the last several months clashing with some of the compliance schemes and the nuances of compliance globally. I'm curious to hear from you, Ted, about how you see that tension between the need for the 24/7, real-time speed that stablecoin rails are starting to introduce, and then the tension with the compliance, for GRC, standards.
Reconciliation, when
How
tariff
B2,
freeze.
yeah, exactly. You took the words out of my mouth. So, what does B2B scaling within the GRC guidelines remain challenging due to the regulatory compliance burdens currently? And where is this all going over the next, 1 to 2 years? Is it going to be a fast track or sort of a slow burn?
Um, well, I will say that things are changing so quickly, just in not just the last 6 months of the year, but within the last 60 days of us recording this, things have changed so much. We've got new regulatory guidelines by just about every regulatory body in the U.S. I mean, everything from the FTC to the OCC, FDIC, the Federal Reserve. I mean, everybody is coming out with new guidelines to streamline the process of leveraging stablecoins. And so what I see is it just really starting to mature. So although it may be a little difficult today to meet those guidelines, it's it's going to be easier. It's going to be easier. And even with these changes, I mean, we're seeing that the amount of effort that we have to put into for clients drop by about 70 or so percent just by the new rules that are starting to happen, because proof of things, although it's important, it doesn't get scrutinized to level. Like, I've got a good friend um, at the FDIC, and the conversation she and I were having was, "Hey, so how are you guys looking when a bank says that they want to participate in digital assets, not just stablecoins, but digital assets in general?" And it used to be like a checkbox that turned into this litany of questions, to now is, do you plan to? Yes or no? No? Okay. Yes. Give us an example. So it
Payments
went from
use
like being
case, right?
super, give us the use case. And then we'll say, does it fall within the criteria of our existing regulatory guidelines?
Yep.
And if it doesn't, here's why it doesn't. And so uh, it's been really interesting. But keep in mind, um, when you look at the AML and the KYC, we just talked about the AML piece, right? And the KYC with North Korea. So that's
Yeah.
gonna continue to get a lot more difficult.
Yeah, and just in terms of those use cases, do you think that that stablecoin sandwich that has been so overused as a term, a reason it's been overused is because it's sort of an easy to see application of stablecoins and cross border. Is that the most pragmatic, still near term approach for stablecoin use? And what are the barriers to entry for using the stablecoin sandwich?
Yeah, I think today, the stablecoin sandwich, I wish we could figure out a better way to call it, right? But
It's
I
just
mean, it is.
purpose-built vendors, basically, right? It's like, okay, I need you, I need you, I need you, or partners.
Yeah, well, right now it's the most practical approach, because, like you mentioned, it works with the current market realities of the different varying ways to do it. But when you convert fiat to stable, you can move them super quickly. You can move them super cheaply. They go across the blockchain networks, and then to convert them back into local currency, depending on your financial institution's guidelines for the off ramp, it's relatively quick. It's relatively inexpensive. It's fast. It's transparent. You can see everything happening in the middle. You can see who touches it, if anybody touches it. And what we've seen with a couple of our clients, and we did stables um almost 2 years ago for a major company that was moving money from the US to the UAE, and moving from using Swift to stables. And we were able to cut their time by nearly 80%, and we cut their costs between 70, depending on how big of the amounts. We cut it from 70 to 90% by doing that. And so companies that are processing billions in this, it's going to make a big difference for them. And not only that, but they're going to be able to do business 24/7. And I think the cost savings is always a place that people go because they're like, oh, moving money is expensive. Yeah, it's expensive because there's a lot of risk in it. But the speed and the simplicity, I think, is really where the draw is coming from, at least from the folks that we work with.
Right.
The cost savings, not so much because it's not as much as you would think it is.
Yeah.
But the speed and the clarity and the transparency behind all of it is really what's driving a lot of it.
Sure.
Yeah. Well, and they'll find a way to monetize it, kind of a little bit differently too, especially if it is kind of like domestic settlement and kind of the FX component is gone. But I would see even why it probably made sense that you were using stable years ago in the UAE. There's all sorts of like on
Yep.
soiling and data requirements and all sorts of
Yeah.
different things going on there as well. So speaking of kind of regulatory aspects, kind of around the stablecoin sandwich modeling, do you think this is the hot question of the day, right? Do you think established remitters should be the bridge between traditional finance and digital asset innovation? Because I know people have had hot debates here.
I think they're positioned in a good place to be that. Will they? That's to be seen, because it takes a different perspective. You have to look at things differently, and those companies that are willing to look at it differently are gonna be the ones that win, because, keep in mind, over 40% of the cross-border transactions today rely on, like, a handful of
Hmm.
correspondent banks, right? So
Yep.
if you can, as an organization, as that remittance company, be able to step in and say, "This doesn't matter anymore because we've done this and we're enabling this," that's a big deal. And
Yeah.
with
Well,
the regulatory environment coming in play, we just had come in the last couple of weeks what the guidelines are for an exchange and for on ramps and for off ramps. It's gotten a lot more specific, at least within the US. Hong Kong, Singapore have launched it. I mean, heck, EU's had it for what, 2 years now. Britain just launched and made a statement that, hey, by the way, all the rules that are along with fiat apply for stable. All the rules that apply for fiat apply to other crypto. Like, we're really starting to see this. So the folks that are already used to that sort of regulatory function are in a great position. The thing is, the question, the $1 million question is, can they get out of their own way?
yeah, the pivot, right? And kind of the innovation. And it's like a lot of the tools really are there, right? It's like kind of like API driven, right? Find a bank things are all everything is built in. And so yeah, it's almost kind of like a race to the finish line, which is really exciting.
Yeah, some of
I
the, I
don't I
mean,
don't think a lot of
Alton,
people realize how big the stablecoin market to support the infrastructure. I mean, let's not talk about Circle for right now. I mean, what they're valued at, what, like $8.8 billion, um, as of the beginning of this week. But the market itself, for to be able to support this, it's estimated to be about
mm,
$225 billion
mm,
of revenue that can be generated by just supporting this. If
right,
that isn't a big enough number for you, then I don't know what is.
right.
yeah, yeah.
Yeah. Ugh. Oh,
I
so
do
I
wonder
think
though, I just
oh,
want
go
to, on
ahead.
the last note of the established remitters, I do, when you see Coinbase and Ripple and Circle all pursuing banking licenses, where are they when they get those rights under their belt, when they get that compliance framework under their belt as part of their DNA? Um, why would an established remitter hold sway when you have the native infrastructure to do stables and crypto transactions seamlessly? You've been building that way natively for a decade plus in a lot of these cases. I don't see established remitters extending a lot of a chance. And I remember there was a survey that I saw in some social posts recently where they talked about how 80 or 75% of Gen Z and Gen X, or sorry, not Gen X, Gen X, I'm dating myself, Gen Z and Gen Y or something would leave their bank for a crypto native or, a digital only bank in a heartbeat. And so if that's the future banking system, you've got these crypto native companies, why would established remitters be the next, bridge to innovation?
Well, that's almost like a consumer use case the
Well, so
way.
that's where I was gonna go. It's like,
Yeah, and, like, the B2B side is the
That's
where
more on
the
the B2C side, right? Right.
yeah.
so look, I mean, if you look at the B2C side, one of the really cool things that I've noticed is kind of a convergence between traditional products and Web3 products, we'll call them, right?
Mhm. Mhm. Like
I,
payroll
I've
solutions and things like that are, like,
well, I mean,
everywhere.
just being able to leverage the traditional Web 2 type interfaces in a way that everybody's comfortable with, but access the Web 3 digital assets. I mean, if you look at it, I've had the benefit, and the chief commercial officer over at banks is a personal friend of mine. So we've talked about this and worked through it. I mean, just this year alone, I think they've launched six cards that allow you to spend your digital asset in real time
Yeah.
using the traditional card rails. And there we've had discussions about how do we expand that out to leverage um, real time payment, request for payment, all of the US based real time payment rails. Like how do
Mhm.
we extend that? And do we extend it to go out, or do we extend it to only to come in?
Right.
And this is like that dichotomy when you're looking at the consumer to business or business to consumer. You've got to give them a way that makes it easy. Business to business, I'm not saying you don't have to give them something that's easy, but you have to give them something that is familiar,
Right.
right? So
Yeah.
there's a
Absolutely.
difference between easy and familiar.
Yeah.
And if you can, and this is why I think the existing remittance players have a benefit. People are used to moving their money using this
Yeah.
tool. They're
It's like a
used to
Uh-huh.
doing all
secret,
this. And if all
work.
you're doing is changing the monetary type from
Yeah.
dollars to USDC or euros
Right.
to
Reporting
what,
is there, sanction screening, AML, like,
Mhm.
all of those things are kind of there, right?
and they
And
don't
it's
have to
all
relearn anything.
yeah, exactly.
Now they may have to understand like timing. But anytime you use a different correspondent bank, you gotta understand, what
True.
is the timing? When do I have to have the information there? When do they send it to the next string in the list? What are the time frames for these things? Does it need to go through additional screening when it hits that next level? Like,
Yeah, and
they're
we
already
already
having
have
to
that.
do that,
Like, with Convera, right, we do just B2B for the most part, like 200 billion,
but they still ask those
TPV.
same questions, right? It's like, when
Yeah,
do I
and we
have to
have,
have it sent
right,
by? How long
redundancy
does it
built
take to
in.
get there? What are the things that could stop it from making there on time?
Right,
They're already
and it's
asking
like
those
you have the
questions.
payment data to give us, kind of almost that dynamic routing rules and logic where it's like we have rail redundancy, we know what's happening, where's the cheapest, fastest way that this is gonna settle, and, even with our we have, like, 60 countries, right, local clearing and settlement, and it's like, same-day FX, sometimes $0 fee FX, right? It's like it's there, right? It's there to leverage. It's just it'll be interesting, I think, to
Now
see.
my crypto native friends would be cringing right now for me saying all of this, right?
Right.
But but because they're gonna lean on, "Hey, with this, we've got programmable money. We don't need all the rules and all the different things that companies like Convera have done. We don't
Right.
need that. That's just extra overhead."
But companies
Well,
need an audit-ready environment, it turns out, right? And
exactly.
that is the way the
Exactly.
corporate world works, right? And the SEC works.
Right,
Yeah.
and the rules,
Ain't that the truth?
yes, they've gotten clearer, but because they've gotten more clear, means that the reporting requirements are now more specific,
Mhm,
and the more
mhm.
specific it gets, the more you have to do, and I look at
And
it
it's
as,
nuanced by geo even, right? It's like, what geography are you moving into that might be net
oh,
new? And then what
e
KYC, what KYB, right?
Yeah. Yeah.
well, then you even get into the service codes for each one of the businesses. So you're having gonna have nuance there because taxation and tariffs and all that other stuff is completely different. And the way they review it is different. Yes, you could build that um, into a digital asset and make it programmable like that. Yeah, you could do that. But is that really where the time should be spent
Right.
when it's already being done by existing players?
No doubt.
Fair point.
No doubt. So what, kind of trying to wrap up here because I feel like we'll just set a V2 session to touch base sometimes soon. What didn't we cover today that's out there, in the streets in the Tedd Huff world? Is there any like good call outs that we should close with?
Oh my gosh, there's just so much going on right now. Um, the thing that I keep telling everybody is that if you haven't tried to figure out how digital assets in general, and more specifically, how stable coins are going to play in your strategy and
Mm,
how you're going to do business, you need to start now.
You sound like
right.
Simon Taylor.
Yeah, trains leaving the station. All aboard.
Like,
Everybody
like
needs a stablecoin strategy.
Yeah. Yeah.
there's you've got to have a strategy for it because it's going to it is happening. Not going to happen. It is happening,
For sure.
and
Right.
it's at a breakneck pace.
Yep.
So whether it's through a partner that can help you get there, whether it's you doing it yourself, but always remember you just because you say you want to do it yourself doesn't mean you have to. And that's where that stablecoin sandwich comes back in. You can
Mm,
use existing players to help you get there to
Yep.
identify how does it really impact your business.
Yep.
sure.
That's so true. Yeah, even some of the banks, right? Like now I've noticed the smaller community banks or credit unions, like, we have a crypto cash back card. I'm like, oh, look at you. you
Well,
know?
and that's funny you mentioned that, right? I'm glad you brought that up because one of the places that I think is going to be a surprise entrant into the market that a lot of people aren't thinking about are credit unions.
Yeah, the QSO or is that what it's called? QSO type of thing where it's like there's all these fintechs being folded in, like the way it was historically with fintechs and banks. I think so too. Tell us
So,
more.
well, so the conversations that we've had with financial institutions, we spent a lot of time in the independent banks and all the community banks, and they're interested, but they're a bank, so they
Yeah, their
follow.
apps are built off the back of their CRM.
Well, not only that, but the way they look at things is different, right? So they look at it as like, what is the best way to make the bank more profitable to be able to offer more things? And it's really driven on deposits. So they're starting to look at, hey, as of right now, these digital assets and stables don't reflect on all of our other metrics. And so, yeah, we have all these assets, but can we loan against them? As of right now, no. But you have the credit unions that are looking at it from the perspective of how do we best serve our members? How do we give them the tools that they need to be successful, to be ahead of the curve, to really do this, which is a complete surprise because if you look at the number of credit unions that are behind the digital curve, it's extremely high comparatively to banks. And I think that's going to be the surprise comeback I think we're going to see in the next, I'm going to say 3 or 4 years. I think you're going to see a big comeback in that area, especially as Alex, you were talking about Gen Y and Gen Z, that they're looking for someone to be purpose driven outside of the purpose of making more money. And that I think is where the credit unions are really going to kick in, especially with that generation.
Mm, interesting insight. Yeah. Gosh, I know so little about credit unions, but I think that's really great to call them out as not something irrelevant, but something very relevant to the younger generations in that way. That's awesome. Well, as Alanna hinted to, we have chewed on a lot today. Ted, it was great to have you, and I'm sure we can find time for a V2 of this, or maybe on your show sometime. We could cozy up in your dark little studio there.
I would be happy to have you guys on Fintech Confidential and dive into maybe some things that I have a blind spot at.
Yeah,
I love it.
Alanna's
I
got
love it.
a lot of insights from her time on the floor at about every single conference there is. So I'm sure there's tons we can cover. All right, my
Awesome.
friend. Good chatting. Good to meet you.
See
Thank you. I appreciate you
soon.
guys having me on.
Yeah.